Good evening, everybody. It's Wednesday, the 23rd of March, and this is the Audit and Accounts Committee meeting. Before we start, I'll just read out the fire evacuation procedures for this evening's meeting. There are no fire alarms scheduled for this evening. Therefore, if the fire alarm sounds, please evacuate the building immediately. The fire exit is located at the rear of the room. Go downstairs and meet in the War Memorial car park. This is a webcast meeting. Members, please note that this meeting is being webcast live on the internet. Please switch mobile phones off or turn to silent. We have three apologies received from councillors tonight for absence. Councillor Faulkner, Potty and McCormick. I see we haven't got Councillor Court as well. Are there any other apologies for absence or substitutions? Oh. Declarations of interest. Are there any declarations of interest? No. Urgent matters. Are there any urgent matters? No. Minutes of meeting held on the 31st of January 2022. Are the committee agreed that the minutes of the meeting held on the 31st of January 2022 are accurate record of the night's meeting? Thank you. We'll go on to item 5. Viewing of social networking sites. So members, this is the usual report which provides the committee with a summary of the viewings of individuals, social networking sites and investigatory capacity for the period 31st of December 2021 to the 28th of February 2022. Are the committee happy to note this report? Okay. Item 6, summary of investment income and property age debt, 2021-2022. And I'll hand over to Sue Curden to introduce this.
Thank you, Chair. So this is just the normal statement that we provide at each of the Audit and Accounts Committee meetings. This was previously requested a couple of years ago by the committee at the time. It is purely for information, because obviously information on the Treasury Management activity is always included in the Treasury Management Activity Report, and going forward the commercial rents and anything to do with property investment will be included in the quarterly reports on the property investment strategy and the annual property plan. So I would ask the committee to consider whether they still wish to receive this statement at each meeting or not, because it's just replicating information that's elsewhere in the agenda pack. But we're happy to do so, but it just pulls out some of the, on a summary. And what this is currently showing at the 31st of December 2021 was that overall we were showing a favourable position of 230,000 on our various investment income streams. The other element that was added to this report, which again in future will be included in the annual property plan quarterly updates to this committee, is the age debt on property. And that shows at the, this was reported to our property board in January 2022, but actually relates to the period to the 31st December 2021, shows that our age debt still stands at £1.83 million. What I would say is that's significantly starting to reduce now, as we have got a number of agreements in place with those with outstanding debt to repay their debt, and we are approaching the position where we can actually legally start to chase some of this activity as well. So that was all I was going to say on it, because the report is for noting.
Are there any comments or questions? Councillor James.
I certainly agree. It seems excessive to have this every single time, because things don't move that fast. So I'd be more than happy to see that it sort of dropped to half yearly or annually if that's appropriate. The only thing I would say is, in relation to the age debt is, I mean, I know what it is, but I don't know how old it is. And that's sort of, it'd be good to have that kind of steer to how far back it was. If we're doing it less often, we can probably add a little bit more detail and flavour to it. And also, and I appreciate this probably might have to flow into the dreaded pink paper drawer, which I know costs you more money, so you don't like using it. But it would be good to have an idea of what we're doing to chase it, because inevitably, and I think we're going to see a lot over the next 12 months, residents will struggle with some of their bills, the council will have to take action against it, and I think it's really important that they can see that we do this very fairly across the board, and we are chasing business, because at the moment I don't know how old it is, and I don't know, I can see a summary of the kind of actions we take, but it'd be nice to know what we've actually taken, because I see, you know, residents taken to court after a couple of years of trying to get money out of them. Are we seeing businesses in court? Be nice to know. So more detail, less frequency is probably the summary of that. And I could have said that in the first place, but there you go.
More than happy with that, and I think as it will form part of the reporting more generally on the annual property plan, I think we can provide more information. We will review it when we've produced it at that level to see whether there's anything commercially sensitive, or whether actually if we give you an indication of the types of debt and the types of recovery that are being undertaken, so you know how much of that, say £1.09 million in property services is currently under some sort of repayment plan or currently under some sort of litigation. We can probably still do that without pink papers, without actually naming the individual companies.
On that, obviously I know that with this committee sometimes you get a very big report, and so we don't get to deep dive on anything particular within that report. So obviously if that's something that could be just torn out of that report and popped into a quiet agenda, so it can have a bit of a detailed look. We're looking once a year, let's drill down a little bit, even if it involves private session.
So would once a year be okay for you?
I might suggest half yearly to start with, to see how useful you find it, and then obviously you can take a further decision.
Okay. Any more questions? Councillor Poland. Any more questions? Okay, the council notes the report, and I'll move on to item 7. Treasury Management Quarter 3 Monitoring Report, 2021-2022. Sue, to introduce.
Thank you very much. So this is the, as you say, the Treasury Management Quarter 3 Monitoring Report for 21-22. And it should be noted the committee is asked to note the Treasury monitoring position as at the 31st of December, and the report obviously does include the forecast outturn position as at quarter 1, which, as noted, is £500,000 difference in the overall total. The executive summary on page 21 of the agenda pack notes that there is a forecast reduction in the income of the £500,000, and the current forecast as at today is slightly improved at £480,000. The overall rate of return is forecast at 1.21% compared to 1.59%, and this is further broken down in Table 2 in paragraph 5.1 of the report. However, as you will have noticed in the report, the table has lost its formatting, the chart has lost its formatting in publication, but the actual detailed breakdown of the information is actually contained in Table 1 in 3.2. So hopefully, whilst you can't see the numbers on the pie chart in 2.1, you can actually see the numbers in Table 1 in paragraph 3.2. And as noted, our best performing return continues to be the CCLA Property Fund. Whilst the report notes that the assumption at that point was that the Bank of England base rate would remain at 0.5%, as we're aware, it has actually raised a further 0.25%, but obviously that happened after the quarter 3 position. The summary also notes that the average investment balances at the 31st of December were 145.11 million and was expected to be 141.17 million at the year end. Section 6 notes the unrealised valuation of gains and losses to all external funds, and as at December, the overall value of investments is £81.4 million compared to the investment of £80 million that was made. Section 7 of the report provides information on how BDBC benchmarks against other local authorities who also have the Treasury Management Advisors of Arlene Close. And as noted previously, this council continues to hold lower risk investments both internally and externally compared to the average of other local authority participants. The TM strategy for 2022-23, approved by Council in February just gone, as previously discussed with this committee, provides the opportunity for us to be less risk adverse and to seek to gain higher returns going forward. The report notes that we have remained within the approved limits of our current Treasury management strategy. Appendix 1 details the holdings that we had at the 31st of December. In terms of the variance to date, some of that is actually linked to the overall value of returns that we, the overall value of investments that we have, but also the fact that in the earlier part of the year it was still being impacted by COVID. I think we have, the position hasn't changed from the previous monitoring position, so in the last 6 months the actual position hasn't changed massively, with the exception of a slightly improved position as at month 10, which is the month after this monitoring period. What I would just like to say though, in addition to this information here, clearly we are being asked by members what's the impact on our Treasury management activity as a result of the current Ukrainian crisis. The team have produced a briefing paper which will be added to the members' knowledge hub, and I will be sending out a link to all members. But I think what I just wanted to really highlight was that we as a council do not hold any investments with Russian or Ukrainian governments or companies, and Arlene Close, our Treasury advisors, have investigated with all our fund managers the position of our investments, and it has been confirmed that none of the council's long-term funds or short-term money market funds have any direct exposure to Russian, Belarusian or Ukrainian assets. Our absolute returned bond has identified that the bond itself in totality has a 0.51% share in BP, which has a stake in Rosneft, and also has a 0.53% stake in Wintershall, which is 33% owned by a company with Russian links. There have been no other indirect exposures for any of our other funds, and would note that this small indirect impact is actually only 0.001% of our Treasury management activity. We are aware that companies like BP are disinvesting themselves from Russian assets, and obviously we'll keep this under review, but our therefore indirect proportion is, as I say, is 0.001%. So we will continue to monitor the absolute return bond, but you may recall from our last meeting when we discussed the Treasury management strategy, this is one of the bonds that we're disinvesting in order to be able to provide funds to support the senior infrastructure funding requirement of the Many Down North project. So there's already a plan in place anyway prior to this to disinvest in that fund. So I think we are content that as an authority we have no significant or material investments that we would be concerned about. And as I say, the briefing note then also goes on to break down each of our different investment categories, and whilst there may be some overall negative impact on the capital values of the investments that we hold, which obviously, as we previously made you aware, that doesn't impact on the revenue bottom line unless we were to sell the assets. However, the likely increases in interest rates that we're seeing are likely to positively impact the returns for the council rather than negatively. So at this time, we're not expecting a significant impact as a result of the current crisis on our Treasury management activity. Thank you.
Thank you. Do I have any comments or questions? Councillor James.
Yeah, obviously I'm delighted that we're getting a little bit braver. I mean, chart 5 on 7.8 on page 27, we are not just hiding behind the sofa. We're hiding behind the sofa under a duvet with the pillow pressed against our face. And I don't know whether it's if you're if you're a council with very little resource, you tend to be bold because you need the money, and if you're a council with quite a lot of resource, you tend to like not worry about it because you don't really need the money. And I think we've slipped into that. So I'm delighted that we're now going to make this money work a little bit harder, because otherwise it's pointless having it. In 7.9, it talks about, in this little spotty graphs, which I quite like, except it combines the return and the value of the investment to come out with a number. And as we always said, and I know some other councillors really struggle, although I think they're mayor this year, with the idea that if you buy into a fund, the fund's value will change over time, and it really doesn't matter. Are you getting your return, and will you get your money back at the end of it, is all we care about. I don't know if there's any way of sort of separating that out, so we can, because obviously we're monitoring, but I'm not sure what I'm monitoring, because I've got this confusion of the value may have gone up and down and fluctuated during the course of the year. I just want to see what the return is, because we're only buying this fund to get a return, in obviously recognising we'll get our money back at the end. And the other thing is the comparisons within this document, and I think it'll be really interesting to watch over the next couple of years, given the change of investment strategy, is that we've got what we set out to do. All of the charts say the same thing. This was our valuation. This was what we expected. This is what we've got. What I haven't got is, what did we get out of this in 2020, 2019, 2018, 2017? And I think that time series is really important, because if you're monitoring and you're commenting on whether strategy is working, you need to look at whether it's in a better place than it was 2-3 years ago, accepting the financial climate's changed, budgets change, etc. The world changes, and so sometimes you do have that. I mean, I was back here in 2008 and 2009, and you should have seen what happened to our investments and how grey people got really quickly. But so we expect to see that, but you've got to look at the time series to understand whether your strategy is working.
More than happy to do that. There is a bit of an overhaul of the monitoring reports for the new financial year, as we will also be adding in sections around when we're doing long-term investments. We're also going to have a checklist in terms of all the assumptions and thought processes around green investments, and if we have discounted particular types of investments that would have otherwise supported the climate change agenda, why that is. And we will also be seeking to get further information as part of our half-yearly reports on our external funds on the climate change impact of our actual external funds as well. So we've quite recently met with the Basingstoke Transition Network, who were quite keen to work with us to help understand how our Treasury management activity was supporting that agenda. So we will be including in future some further information on that as well.
Any more questions? Councillor Poland. Right, Councillor, could you press your button, please?
2.1, the pie chart, obviously there's no analysis on the cell. But if you could turn over the page, the 145.11, so you can work it backwards as to what that relates to. It was mentioned at the last meeting that we were going to, as you rightly suggested or stated, a change in investment strategy. There is an investments realised of 253, but I can't see where that's gone. So is that part of the change in investment strategy or not?
No, so that just relates to liquidity cash. So over the year, obviously, we all our short-term cash is invested and then taken back out in terms of our cash flow and our spend pattern, and then reinvested. So what that's really saying is, over the period of the year, we've withdrawn, effectively 257 million and reinvested. And by reinvested, we mean back in short-term money funds, money market funds, etc. That is literally just the cash flow of the organisation.
If you go to chart 4 and 5, these are there's a special name for these charts, which I won't bore anybody here with, and I do understand the council's policy of caution, but if you look at those efficient frontier charts, which is what they basically are showing, relative risk and reward, we're at the bottom of return and in the lower element of risk. There are other areas further up in that chart where people are in the same risk area, but they're getting a significant higher return. And I've always queried, if we're saying that the forecast return is going to be 1.21%, I think, if I'm correct, estimated, when inflation is at 6, 7, 8, whatever figure you want it to be, I know we're going to change the strategy marginally, subject to not jumping out from one area to another at the wrong time. So that kind of worries me as to where the advisors are putting us relative to other people. And I did raise it as a corollary to that at the last meeting, which I think Ellie kindly came back on to me, on ETFs. And I was advised that we can't consider an ETF because it's a high risk or risk. But as you know, an ETF is just a collection of passive funds. I don't understand how, if we're going to go into multi-asset funds, which are broadly similar, or actually I would argue they're higher risk than an ETF, I really don't understand where an ETF, we're being advised that an ETF is high risk. And there was another aspect to that, and I cannot for the life of me now recall what the answer was that I was given, but it wasn't possible to do, which I really didn't follow at all, because in my own practice, we run ETFs. So I don't know whether that's a legislative issue for the council.
So just picking up the first point first, obviously the whole point of some of the reason why some of these local authorities have the lower risk but the higher rates is because they still have access to, for example, some of the long-term bonds that have now, that for us have matured, which has actually brought down our return, if you like, for the level of risk. And it's actually nearly impossible to actually replace those with like for like. And also some of the other local authorities clearly have a far less risk-averse treasury management strategy. So from an Arlene Close point of view, they provide the same advice and support effectively in terms of these are the available funds, but obviously each individual local authority is advised based on its treasury management strategy, and therefore what they provide to us is what's within our strategy. Now, we meet with them on a quarterly basis where they test other things with us that would be within our strategy, and obviously now and again we do, so a bit like the CCLA fund when we chose to diversify money into that fund, we felt that was an appropriate thing to do as officers. You may recall that it actually came back with an awful amount of concern from the audit committee at the time. So we do look to diversify the fund within the strategy that we have, but actually we've been, in the past, the committee has also been extremely cautious, and obviously that's been reflected in the Treasury Management Strategy that's been approved by Council. The opportunities that we obviously have going forward is that we have introduced classes that are far more volatile than we're normally used to, and we will look to diversify into those activities. In terms of the funds that you're talking about, so they are more volatile, but also it's the issue, and it is unfortunately an accounting issue, in that we have to treat them as capital expenditure rather than investment treasury management. So that means that we have to put it in the capital programme, which we would choose not to do, because obviously then it's not treasury management activity. So, and we don't want to tie up the funds in that way. So I can resend the information round, but I thought when I read it, I thought it was quite clear in terms of why we wouldn't seek to invest in those types of funds at the current time.
Well, I think the point I was making was that if we're going to have a marginal change in strategy, I fully accept that the council doesn't want massive risk. It's not our money. It's, frankly, belongs to the public. But there's a corollary to that, that if it's the public's money, we should be seen clearly to be getting as good a return as we can, because if we don't, then all the services that our residents want, we can't pay for. So if we're getting a better return with as little risk as is possible, then obviously we can then do more things for residents than is otherwise the case. So I accept there's a balance. My view has always been that I think the balance is wrong, but I do recognise that we are maybe now moving to a position whereby that's going to be more tolerated, I think might be the word I'd use.
Absolutely. So obviously as officers we can only work within the strategy that's approved by Council, and we're certainly looking to see, I would accept that we haven't pushed the boundaries of the strategies that we've had in the past, and then we do have a further opportunity now to try and readdress those.
Are there any more questions? Councillor Connector.
I know we're going to, excuse me, I know we're going to change our strategy and stuff like that, but are we going to have that middle of the road attitude still when it comes to risk sort of thing? Say, okay, take slightly more risk, but get better returns, or are we going to be, okay, we're going to change it, but it's going to be middle of the road still in those risky sort of investments.
So we're not suddenly going to go completely to the other end of the spectrum. What we would look to do is look at opportunities that further balance the portfolio. So some that may be more volatile. So for example, some of the equity type schemes that we could have a look at will be more volatile. They will give us a greater return, but we will do that in moderation. You know, we will look to do this on a staged approach over a period of time, but we do need to keep the portfolio balanced and to ensure that we do have those types of returns. So what's quite interesting, for example, despite a number of concerns, for example, that were raised about the CCLA fund, and Councillor Jones is laughing because I can't help myself, but it's one of the things that is really, really well you know, it's very protected in this type of crisis that we find ourselves globally. So it's important that across the portfolio, because anything can happen at any time, we do have a balance that allows us to continue to get the best return that we can. But I do think that we can look at higher returns with higher risk, but we have to do that in moderation of the overall portfolio.
Councillor James.
I think one of the problems, mistakes the council made, was that for many years we've not only been very risk averse, we've also had risk reserves that are in short-term investments because it has to be accessible. And that's kind of like double safety. So not only have we not taken any risk, we've covered the risk we didn't take just in case. And like when you've got interest rates of 0.1% and you have a risk reserve in case they go down, you kind of start worrying whether the council's got its priorities right and making best use of the funds. So I think actually we can take more risks, but there's still a risk reserve there, albeit I think it's being reduced because that was excessive as well. So I think it's encouraging to see that we are, but don't worry, I don't think we'll see the head of finance going into the bookies anytime soon. If we do, I'm sure someone will call us and let us know.
Any more questions? Okay, so for item 7, the council notes a report. Move on to item 8, Housing Benefit Subsidy Certification Report for the year ending 31st of March 2021. And I'll hand over to Sue to introduce.
So hopefully, if you've had a chance to read this report, you'll note what a fantastic outcome it is for the council. So KPMG have undertaken the normal annual audit of our housing benefits activity. And this report provides the certification letter for the 31st of March 2021. Housing benefit expenditure totals 32.5 million, the bulk of which we get back in subsidy from the Department of Work and Pensions. And out of all of the activity as noted in the reports attached to Appendix 1, we had 2 very minor errors which netted off at £7.82 and £9. So I hope that the committee would concur with me that this is an excellent outcome for us, and it is only achieved by the significant amount of hard work and the attention to detail that's carried out by our benefits team.
Councillor James.
Yes, Chairman, I don't think we should just note the report. I think we should congratulate the officers. That's unbelievable. As anyone who's worked in like supermarkets and tried to cash up tills, for a £32.5 million budget to come out with £16.82 worth of errors over 2 transactions is absolutely incredible. And I really think we must make a record on the minutes our gratitude to the officers for the incredible dedication and hard work they've put into getting these figures so accurate.
I certainly second that. It is an excellent work. For such a minor variant, it's incredible. Any more questions? So I'll note the report and move on to item 9. Internal Audit Plan 2022-2023, and I will hand over to Paul Gundry to introduce.
Thank you, Chair. This report is to ask the committee to approve the internal audit plan for next year, as well as the internal audit charter. The details of the internal audit plan can be found on page 61 as Appendix 2. They're the audit assignments I'm proposing to carry out next year. And the internal audit charter can be found on page 51. There's only one change to the charter from the charter that was approved last year, and that's just changing the year to reflect 2022-23. So I just asked the committee if they'd be happy to approve the internal audit plan for next year as well as the internal audit charter. Thank you, Chair.
Thank you. Ask the committee. Any questions? Councillor Tom.
Just for a clarification, so we have an internal auditor team and external auditing team. So which one is the external? Is it Ernst & Young? And KPMG is the internal, is it?
So KPMG do our housing benefit audit,
Okay.
but EY do our financial accounts audit.
Okay, so then do we have any, our internal auditing team is our staff? Okay, thanks.
So shall we approve the internal audit plan 2022 and the internal audit charter 2022-2023? Agreed. Item 10, internal audit progress report December 2021 to February 2022. Can I ask Richard Beavan to introduce?
Thank you, Chair. So this is the regular progress report I bring to the committee for the work that the internal audit team have taken at the coalface, so to speak, and it also summarises the current position with regards to outstanding audit recommendations up to the end of February. I'll just point the committee to the table in paragraph 4.1 of my report on page 65. And the report shows the reviews that we've completed over that period. And you'll see there's one where we've given full assurance, 4 that have given substantial assurance, and there is one this time where we have split the assurance in relation to the IT network security audit, where we gave substantial assurance with regards to the IT network and a limited assurance with regards to staff and councillor awareness with regards to phishing emails and the risk that they pose. The summary of those reports are shown in appendices 2 to 7 of my report. With regards to the recommendations, just quickly to paragraph 4.2, 4.3, which shows the latest position with all outstanding audit recommendations where we have agreed the actions with the relevant heads of service or managers, but they've yet to be completed. They're shown in Appendix 1 to the report, and it's these recommendations that we chase up on a monthly basis and update monthly. So I just request really for the report to be noted. Thank you.
Sorry, are there any questions or comments? Councillor James.
It was just a few bits on it. I'm a little bit concerned about the statement in there, which is down to 4.2.4.3. COVID-19 is still having an impact on the progress of completing recommendations as reflected in some of the comments received. And I just think that I got that in 2021, totally. But now we've kind of learned how to live with it, live around it. And I know we're not all back in offices every day, but we're kind of using all these, I don't get, somebody you're waiting for an email from someone who works in this building, albeit virtually in this building. And it just puzzles me. On page 69, 5.3, parking services, been waiting for a response since, the last response was February 22. With parking services, I don't know if that meant the car parks, which I get, or whether it meant the residential permit areas, which at the moment are interlinked, but as of the 1st of April, I think they're no longer interlinked because Hampshire County are doing disastrous things with it. So I just wanted to check, is that been updated in terms of what we're asking for the parking managers to do? Has that been updated to reflect the change in the service that's going on? Because I don't want to be waiting 6 months for a response. It's irrelevant by the time we get it.
Yeah, I'll take that one, thank you. Yes, the recommendations haven't been updated to reflect that change because we were waiting for full confirmation that that change was going to happen. Last we heard it was in motion, so we can follow that up, and if the change is being made, we can obviously reflect that in the recommendations table.
I mean, it is a Hampshire County Council decision, so until you see a Hampshire County Council Highways officer walking around giving out tickets, I would assume it's in flow. Apparently they've got some recruitment problems. Basingview Leisure Park governance was flagged up. Target date for completion, 30th September 21. No response received to reminder email of the 4th of February 2022. I don't know how we escalate these things, because that's a significant amount of money. Now, I appreciate the leisure park's all gone a little bit wobbly and moving at a very leisurely pace. But Basingview, you know, if the governance is a problem, bear in mind what happened to the leisure park, and governance was an issue in spotting that. I'm a bit concerned that nothing's happened. Has it been escalated? When do you get to escalate it and stand and do a T-shirt protest or some sort of very lib-lemmy thing?
In terms of process, I'll remind the committee that they can actually ask any officer to the committee to give the reasons for non-progress of recommendations. That's within the charter that's just been approved. So I'll put that on the table for the committee if they wish to take that forward.
On that particular one, I believe that has actually now gone to the Basingview Executive Committee. So I think that's probably a lack of update from officers to audit in terms of informing of that. The audit team do escalate it to the directors, who also have the opportunity to chase up some of this activity. And certainly, as Paul said, you know, if there are areas where they do not appear to be updated, we are very happy for you to ask for the appropriate service officers to come and discuss it with committee directly.
Clearly aware of the forthcoming event in May that we'll probably all play. It probably is unwise for this particular committee to request someone turn up at the next committee, because it might be completely different people. Why is this person here? But I think we need to somehow just put it on our radar that if we do return, or those of us who do return to this committee, I'm hoping not to, but we do return, that we do actually look at that and get that brought in, because if we've got that power, we really should. It's red, it's been sitting in red and it hasn't had a response, and it's frankly not good enough.
Well, that comment will be minuted, so. Any more questions? So, so the committee notes the report, and I'll move on to item 11. Review of Corporate Risk Register. I'll hand over to Paul to introduce.
Thank you, Chair. Again, this is the report on the Corporate Risk Register, which is in the usual format. What I wanted to do is highlight paragraph 1.2, which can be found on page 116, which shows a change in a risk score, which relates to cyber risk. I don't think any of us are surprised about that one. And also wanted to highlight to the committee that we do have a new corporate risk, which is emergency planning. That's also referenced in paragraph 1.2, and the details of that can be found in the risk register under RR11. And just for reference for the committee, there's a diagrammatic version of the corporate risk register which can be found in paragraph 1.3. Other than that, I was just going to ask the committee to note the report. Thank you, Chair.
Are there any questions? Comments? Okay, the committee notes the report. Item 12, Audit Accounts Work Programme. Which can be found on page 139. Are there any questions or comments? Councillor James.
I'm disappointed. It's got A Swain / S Finch. I'm seeing nothing for Sue Curidan here. I think we need to make a better use of her time. Get busy. Find something for her.
Excellent. So that's the end of the. That's everything. Yeah. So. Yeah. Yeah. Graham would be proud of me. Thanks, everybody, and good luck in the elections.